Hello, everybody. We'll get started with the webinar at this time. Before we get going with the charts and all, let's do a quick systems check. Just give me an OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're up and running okay. Uh, Welcome to the webinar. My name's Troy. I'm a senior account manager with AvaTrade. I'll be leading the crypto webinar today. We've got a few things to look at. There's actually been some terrific movement and some driving fundamental news behind it that made it predictable. We'll take a look at that. We'll take a look at the charts and some moves you could have done, some moves you still could do with potential built into them. So a lot to look at, and some pretty obvious things that have been happening that you might kick yourself you haven't taken advantage of already, and that you might be interested in moving forward. Keep in mind, all investments have risk. This includes obviously trading forex, CFDs, spread betting, options. No one trade, no one investment is guaranteed to profit. I think we all understand that. It makes sense. You should manage your risk in a way that you don't expose more than you can afford to lose. And at the same time, we all understand that there is a nice potential for profit as well. That's why we're all here. And the idea here is we're going over things not from a financial advisement perspective, but what we go over is meant to be more of an educational perspective. Okay, so as you take in the information, take in the knowledge, you're adding more information to your trading plan, more ideas to your trading plan to hopefully improve upon what you've already been doing, and in the end, improve upon your P&L. Now, you can see here on the slide, more people lose in the long run than win with this type of trading. But I think it's actually pretty impressive that with AvaTrade, you've got almost a third of traders that profit long term. Long term profitability is not easy. You have to have a strategy that actually means something, right? It has to win more than it loses enough to overcome the spread and the small swap fees if you're holding trades overnight, and then build a profit after that. And so if your strategy is just more of up and down, break even, and guessing, you'll gradually lose. And a lot of people are trading this way, just kind of guessing and gambling. But there's no reason why you can't be in that third or so of traders that are able to find profitability long term, or at least profitability for the length of time that you intend to trade. We hope that you plan to be with us long term. Now, my goal, obviously, and our goal as a broker is to have as many of our traders be long term profitable traders as possible. And you might think, well, how would the broker make money if everyone's making money? It's a misconception. Most brokers don't make money off of your losses. AvaTrade is no different. You can look at us as what you might call a hedging broker. We make money off of the spreads and the swaps. We want even trading, a fair marketplace back and forth. If things get lopsided, like maybe for instance gold was climbing so much, everyone was buying on gold. We're a hedging broker. That means we use outside liquidity providers to go with the traders if the trading is offset in one direction more than another. And so in the end, the business model still then is to profit from the spreads and the swaps. And so if we can have 60%, 70%, 80% of our traders find a way to have long-term profitability by beating the markets, that would be tremendous. Because long-term profitable traders bring us spreads and swaps long-term, even if we're hedging outside with outside liquidity providers. So this is our hope with the webinars, is that you can improve upon profitability as you learn. Certainly, as I said, not from a financial advisement perspective, but from an educational perspective. One thing to keep in mind, now it's not available with cryptocurrencies, but if you haven't used the Avago app, the Avago app has on it a protection feature called Ava Protect, which you can put protection against losses on your trades for all FX, gold, and silver. I know a lot of people, gold's been the hot thing lately. We do have this protection feature through Ava Protect. For a flat cost, you can cover your complete risk for 1 day, 2 days, etc., whatever time periods are offered. And a lot of traders have worked that into their risk management plan that works very well. If you have any questions about that as we go along, please ask. All right, so as we move forward, we obviously will be using assets that use what's called blockchain technology. That's what cryptocurrencies use. We don't need to get into all the science behind it, maybe another day, but understand that this type of technology is very secure, decentralized, meaning it does not have one nation to call home, which is important when it comes to fundamental news to understand that being decentralized means if one country has bad economic news, it doesn't affect the cryptocurrencies, right? Because they don't have one country to call home. So you think of it more like gold or oil that is kind of nationless. And so cryptocurrencies have that advantage that the technical analysis really works very well with cryptocurrencies because there's less fundamental news affecting it. It doesn't have a country with jobs numbers, economic reports, these things coming out. But there are some fundamental things that come out, and we'll take a look at some now, actually, before we jump on the charts on my demo account. So let's take a look then. First of all, why am I looking at economic announcements that have nothing to do with cryptocurrencies? Because cryptocurrencies, most all of them, are paired against the USD. Okay, we do have some other offerings with Bitcoin against the yen, the euro, but 90% or more of the offerings with cryptocurrencies, they're paired against the USD. So we should understand what's going on with the strength of the USD, since that's what they're paired against. And what do we see? Fear is down. The fear index, the VIX index, otherwise known as the volatility index, is down, which means probably gold is also dropping a bit, and all the markets have turned green. Okay, so all that fear that was there from the end of last week with the missile attack on Iran from the U.S., with gold shooting up and the markets dropping, things were kind of a mess for a while. Today looks like a recovery day from that. Okay, at least so far. Markets are all in the green. Fear index is dropping, and we can see what's happening with the strength of the USD. The dollar index is going up. Okay, so that's something to keep in mind. The stronger the US dollar, the harder it is for anything to climb against it. And Bitcoin, Ripple, all of these cryptocurrencies, as I alluded to, are paired against the USD. But it's not like the USD is shooting up rapidly, but it is up some. Something to keep in mind, but doesn't look like a huge effect with what we'll be looking at. All right, so we'll take a look at a couple things. Okay, this is an article I found. Ripple correcting gains after rallying on good news. Anyone know what the good news was for Ripple? There was some news that came out, if you weren't aware of it, that let's look for the name of it here. The crypto exchange Binance announced the launch of some perpetual futures involving Ripple. Okay, and they're saying that they expect this, and they're offering some leverage and different stuff. So this increased the happiness, so to say, for the market value of Ripple. So as companies start to offer cryptocurrencies more and more, we offer lots of cryptocurrencies. and so do lots of other companies. So as there's more of a market share for a particular brand being added, what happens? Well, there tends to be good news for that asset. Thomas, you typed no a while ago. What's that about? Ah, you were answering my question. Never mind. About I look at I can see the time of when you typed it. You were answering my question about if you knew why Ripple had good news, what it was. So that was the good news. More market share with another company, and up went Ripple, right? And so here's another article. Bitcoin and altcoins look primed for further gains. That was today. Okay, that came out today. Primed for further gains. Now you might say, well, how do they know that, right? Well, let's look at another article. Uh, this was from yesterday. Bitcoin gaining bullish momentum. Altcoins outperform. So here it said Bitcoin gaining bullish momentum a day ago. Guess what happened over the last day? From yesterday to today, that prediction came through. Not only did it gain bullish momentum, but it went rushing up. Okay, so this article, had you looked at it yesterday and maybe acted on that, you could have made a lot of money on Bitcoin. So then we go back and we say, okay, that's what they said yesterday, and we see what happened on the chart in a minute. Similar sentiment today. Bitcoin and altcoins look primed for further gains. Okay, so what kind of sentiment would we say is on the markets right now with these headlines? And here's another headline. Crypto market sentiment improves. That was yesterday as well. We see Bitcoin's leading the way. The sentiment is the highest into the positive zone, somewhat positive zone. And the others are in the neutral zone, but most of them improved quite a bit in terms of their sentiment scores. And so we're looking at positive sentiment with all these headlines, all these articles about the cryptos. Okay. Now, as we go then to the charts, we say, okay, let's look at Bitcoin. It went up, right? These are 15-minute candles. Up, leveled off, up, and now leveled off again. Okay. So, first of all, going into yesterday, very simple strategy setup would have profited nice here. And you wouldn't have had to have known which way it was going to go. You notice I just drew two lines. Okay. I mentioned the fact earlier that technical analysis tends to work very well with cryptocurrencies. Less false signals, maybe. Okay. Why is that? We were discussing because cryptocurrencies are decentralized based on the type of technology they use. There's not one home base in a certain country or something where that country's economic fundamental news would mess up the movement of a cryptocurrency. Tends not to happen, right? The fundamental news that moves the cryptocurrencies is like what we just looked at, news about cryptocurrencies specifically, or about the regulatory environment for cryptocurrencies. But news about jobs numbers, factories numbers, economic reports, trade deals, all of this stuff, cryptocurrencies aren't really touched by that so much. Only maybe in a positive way where cryptocurrencies have been used kind of as a safe haven. And we'll compare the recent movements to gold in a moment. As fear goes through the markets, cryptos have been rising. Why would that be? They're decentralized. They don't have a nation to call home. They're kind of like gold, being decentralized without a nation to call home. Okay, so cryptocurrencies have mimicked gold for some time. We looked at it all last year, if you've come to the webinars, and it happened again yesterday and through the prior days as gold has been climbing. We all know gold's been climbing. Well, look what the cryptocurrencies did at the same time. Okay, over the past couple days, up, 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 up. Okay, it's not surprising to me or to others maybe that have been paying attention to this trend in terms of cryptocurrencies and gold not being a perfect mirror of each other, but being directional in a sense, in the same direction many times. Not exact same timing always, right? But same general direction many times. So what we're looking at then with Bitcoin, I drew two lines: resistance, support. So yesterday, as this was moving sideways, consolidated after a climb, it consolidated, went sideways, formed a little ranging alleyway here, up, down, support, resistance, and then a breakthrough. What kind of pending order? This is simple for those of you who've attended my webinars. Once you saw this ranging pattern and you knew there was fear on the markets and you understand cryptocurrencies have been mimicking gold quite a bit and you knew gold was rising, what kind of pending order would have made sense above this resistance? Buy stop, very easy strategy. Many traders took advantage of this because they understood what's been going on with cryptocurrencies being used as a safe haven by many traders over the past year. Huge fear on the markets. Boom, we see a rise in cryptos sometimes. All right, so what you do, buy stop, entry point, here's your breakthrough candle, it triggers and it never looked back. It's not like it would have come back and hit your stop loss and then went back up. Once it broke through this high point from this wick here, that was your entry point, breakthrough, you're in, and up it went. Okay, so that profit, had you done a buy stop there, you're talking a rise from, if you got in, let's say 76.12 right here. If you got in even a little late, 76.12. Once it consolidated, let's not pretend you'd have got the highest point to get out. Once it consolidated and was moving sideways, maybe you got out right in the middle of this, 7,900 even. Okay, so you're talking from 7,600 or so to 7,900. That's $300 rise in the price of Bitcoin from a very simple pending order. Very simple strategy, a breakthrough strategy set up in the direction that made sense for what was happening since last Friday with the potential war implications with, the largest economy in the world in the US and one of the strategically most important locations in the world for oil being near the Straits of Hormuz with Iran. Okay, the Strait of Hormuz. So, which is the waterway there that narrows and passes through where Iran is located, where lots of oil is shipped through from multiple nations to get to the rest of the world. So, lots of reason why gold was climbing and Bitcoin followed. And so, even if you don't know anything about that, still pure technical analysis, you could have set up for a sell stop down here. You could have set up for a sell stop here, right? It was ranging, support, resistance. What happens when you have a range with a tight distance between support and resistance? Does it go forever, or what always happens? What always happens eventually to a tight range? When it's ranging tightly like this, what always happens eventually? A breakthrough, exactly, a breakthrough. There's always a breakthrough eventually. It does not, there's not any asset that's going to range in this tight corridor forever. It's going to break one way or the other eventually. So if you said, the question is when and how far, right? Doesn't always work out this pretty, that's for sure. But if it works out this pretty, one out of every, 4 times you try, you can be right once and wrong 3 times. The other 3 times it could have broke through and come back down, Okay, you take a small loss, boom, you take a big win, and you're still up overall, even if you win 1 out of 4. Okay, and really you should win at least 50% of the time, shouldn't you? All right. So even if it's just pure technical analysis, numbers based, and you're not taking into the account that, cryptos have been mimicking gold and the fundamentals were on the side of gold rising, even if you weren't taking that into account. If you just set up a sell stop here and a buy stop here waiting for the breakthrough, you still win. In this example, you win very well. Okay. So I'm not saying don't take into account fundamentals. I'm saying you don't always have to, right? If there's nothing happening in the fundamental sense that you can find, you still can trade technically. Okay. Fundamentals help. I'm a firm believer that combining technicals with fundamentals is helpful. Let me pause for a moment. Any questions at this time? Questions or comments? If anyone needs me to run through how to set up the buy stop, sell stop, I'm happy to do that. Let's go ahead and look at another asset. Oh, you know what? Before we do that, we looked at what we could have done. I apologize. Let's look at what you could do still. So don't we have kind of the same thing happening here that was happening down here? Little wider range, okay? It's not as tight, but it's ranging. Resistance, support, resistance, support, support, resistance, support, okay? So we've got a support level here. We've got a resistance level up here. If this is going to pull back, couldn't we do the same thing? Set up a sell stop down here in case it breaks. So, Reen, there's no reason why someone who's first getting into trading can't specialize in cryptocurrencies. Certainly you can. It's something where you need to manage your trade sizes. The leverage isn't as high with cryptocurrencies as it is with some of the other assets. So make sure you have enough funds in your account to actually open the positions. Your risk doesn't have to be as much as required. That's required to go to margin. That's two different things. So having lower leverage and needing more funds in the account doesn't mean you have to risk more funds. It just means you need more to open the position. And then your risk is based on how many coins are in your position size and what's the distance that you're allowing it to move before it would hit a stop loss if you're programming one. That's what determines your risk. And you know, by the way, that's where AVA Protect comes in nicely for the FX pairings and gold and silver. Is you can manage the risk even tighter with those assets with AVA Protect. With the cryptos, we don't yet have AVA Protect available on the cryptocurrencies, but just reminding you of that tool for other assets. But with the cryptocurrencies, you can limit your risk very simply with stop loss or setting up potential hedge positions, which we could talk about if someone's interested. All right, so we've got a range going here. Certainly, is there positive sentiment or negative sentiment today on cryptos? All those articles we looked at, what does that tell you? Yeah, I'm with you guys. Seems like probably more positive sentiment today than negative. Okay, so maybe you believe this support level should hold then, right? So you could take a market buy off the support, right? It's if you believe this should rise, it's in a perfect technical entry point. If you believe there's positive momentum still for Bitcoin in this case, Bitcoin sitting on a nice support level, you can't get a much better entry point than that. It's bouncing right now up off the support. You could take a market buy to go up, and your take profit if you're scalping could be just before this resistance up here. Okay, that could be a quick from 7,800 or so to 7,880, quick $80 scalp. If you call that a scalp, $80 rise. That could be quite a profit depending on your position size. So there's potential here for rise. No guarantee it doesn't break the support, but you don't have to risk much. Where might you put your stop loss if you took a market buy now? Just below the support, correct. Here's the support. The reason if in this example, the reason why somebody might buy now is because it's right above the support. And so for that reason, you're saying you don't think it'll break the support, then your stop loss would be just below the support, somewhere down here. Okay, so you don't have to risk much for a potential gain of maybe three times, four times as much. All right, so that's not a bad setup if you like a market move, if you like the market to rise back up right now. Technically speaking, it's a nice entry point for Bitcoin USD pairing right now. You could back that up with what? In case you're wrong. I always say don't try and guess the market, right? You got to try and make moves, right? The profit, but always give yourself the chance that if you're wrong, you still could profit. So if you do a market buy and it goes bad and breaks and hits your stop loss, I could have a sell stop also ready to go right now. So I could have a sell stop programmed and do my market buy. If the market buy goes up and wins, great. The sell stop never activated. If it breaks the support and plunges, okay, it hit my stop loss on the buy. I took a small loss, and now I'm in on the sell with my sell stop with my pending order. Okay, type okay if you're with me on that. Kind of a 1-2 setup as a potential move if you like the idea. Okay, great. So that's one idea here. Another idea is you could just do breakout strategy, like down here, right? We said it's got to go one way or the other. It's either going to break the bottom or the top, and here it broke the top. You could do the same thing here, a buy stop at the top above this resistance and a sell stop below, and you don't have to do a market move in the middle. You can wait. If it breaks down, your sell stop kicks in. If it breaks up, your buy stop kicks in with your stop loss on either side of the support or resistance with minimal risk. The stop loss, you have to have a reason for where you put it. And so the stop loss, you put in a location that makes sense technically, meaning maybe on the other side of a support or resistance line, and far enough away to avoid false signals. So you see these wicks. This wick came down and went up. This one went down and went up. Usually you want your stop loss beyond the wicks. Let's say if I was buying here, I want my stop loss beyond those wicks to avoid false signals before it goes the right way. Okay, so it's called widening the strike zone, to have your stop loss far enough away to avoid false signals. Okay. Okay. If you don't have enough in your account to trade the cryptos because the leverage is lower, then nothing moves exactly like the cryptocurrencies, right? But there are lots of assets you could trade that have a lot of movement potential. And I would compare the cryptocurrencies and Bitcoin to gold, oil, and indices. Okay, the indices are nice, like Dow Jones, Nasdaq, the CAC 40. Some of the FTSE, some of the other indices around the world, they move very nice, lots of points in a short period of time, like cryptocurrencies can do, and they also can be very predictable because indices are based on a large group of companies moving the indice together, and those companies represent the span of an entire economy basically, and so indices are predictable in their movements in that they move on large scale economic news like US-China trade war, missile attack on Iran that could disrupt oil. Major events move the indices, and then they move in large amounts. So you got this news that's obvious news, and then you've got this asset that moves in a very predictable direction from it. So indices are very nice as well. All right, so let's take a look beyond Bitcoin. We could look at the crypto index. Okay, similar but not exactly the same. Okay, the index already broke the support here and pushed down to the next support level here. Okay, so could that be a sign of things to come for the individual cryptos? Could be. If we draw a line at where this paused, it broke this support level here. Already broke it. Okay, it's down below it and looks like it could keep dropping. If I'm trading the crypto 10 right now, technically speaking, this looks like a downtrend. And it looks like it has room to drop until it gets maybe to here. Here's the next major support level. So you could easily say, okay, I'll buy on Bitcoin and I'll sell on the index, even though Bitcoin's part of the index. You're kind of hedging yourself that way. Could win on both, but probably won't lose on both. Okay, not that you couldn't, but it hedges itself. All right, so the crypto 10 looks like it's trying to downtrend. It's very interesting to look at. And let's look at Ethereum. Same thing. Ethereum looks like it's not done dropping. It broke the support. It's Bitcoin that's holding its own. It's holding itself up. Other cryptocurrencies are dropping. We can see it. It's not the same for every crypto brand. Let's look at Ripple. Same thing. Ripple's down. This is why the crypto 10 is down, because many of the brands that are in the crypto index have broken their support and dropped. Now, this reached another support level here. Here's the support. Here's the support. So Ripple, if you think there's positive momentum still, boy, that's an opportunistic entry point for a market buy, because look what just happened. It just crashed down to this next support level, and look at it bouncing already. That could be a positive, or not positive, an entry point that is opportunistic for anyone who thinks the market sentiment is still positive for cryptocurrencies. And we looked at a bunch of articles that had positive sentiment just a bit ago. So that's got some room to climb. If it is reversing, it's got a lot of room before it reaches the next support level. We see support, 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 broken, down to the next support and bouncing. Okay, wouldn't have to risk much to the underside of that support. Okay, so very interesting setup here for Ripple. I tend to like to go with the market sentiment. So if the crypto 10 index was dropping, I might lay off that because the sentiment is positive right now. This is on a nice support level, bouncing. I might prefer to go with that move. Okay, that doesn't mean you have to prefer that. I'm just lending in the idea of going with the fundamental news along with the technical entry point. You certainly could lay off any move, or you could do the opposite thought of what I'm saying and say you think it's going to break this support and go with some sort of sell setup. If I was selling, I would wait. If it broke this support, I'd have a sell stop down here. I would have a sell stop waiting for confirmation for the support to get broken, and then it enters. Market buy, sell stop below the support. It actually looks like a very nice setup. We can see this bouncing as I'm talking, it's rising. It just took a rapid drop down to that support. Okay, any questions at this point? We've taken quite a look at a number of crypto brands here, and they all look like they have great opportunity for some movement here with some opportunistic entry points on support levels. Yeah, listen, after that much dropping, most indicators are going to show oversold. The question is, do you trust the indicator? Does it line up with the fundamental news? All of those things, and probably you're thinking, yes, it probably does, because of what we just looked at with the positive sentiment scores and positive headlines for the different crypto brands. So Listen, if that's part of your checklist and it all lines up, make your move, right? It's a small risk to the other side of this support. The further it climbs, it's getting to be a bigger risk to get your stop loss below the support because it's moving up as we're watching it. Thomas, you never want to try and guess. You're not trying to guess whether it reached the bottom. What you should do is use the technical entry point. Does it make logical sense? It's on a support level. If it makes logical sense to take a shot at it, you make your move. You have limited risk to the underside. Of course, it could drop more. You never know for sure if it reached the bottom. It's about potential. It's about potential. Right now, the reason I'm not looking at 4-hour candles, 1-day candles, I'm showing you scalping moves because cryptocurrencies are tremendous for scalping. Okay. You can make a lot of money in short periods of time with cryptocurrency, and the technicals usually work very, very well. The technical entry points, like what we're looking at. Okay. You can make very nice potential profits with technical entry points that make sense with cryptocurrencies. Okay, great. What we can do, let's go back to Bitcoin. I promised to show you something. And we'll look at that. And then let's pair that with gold. Ah, there we go. Okay, so we've got then Bitcoin and gold. Let's go same length candles. Whoops. Here we are. All right, so don't those look similar? These are 1-hour candles. Okay, look at this climb. Look where gold started its rally. Gold actually gapped, but same rally up. Look at the rally up, almost the same day by day. Sometimes it's 1 day different, but look at the movements. Up, 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 up. And then look what happened here. Flattened out, flattened out. Okay? One happens a little before the other. It's not hour by hour the same, but look at the general trend. What direction? And boy, I need to get rid of some of these lines. Let me get rid of these. Many webinars worth of lines. Let me delete them. Okay, so what do we see here? We see a general upward rush followed by a flattening out and a slight drop. Okay, what do we see here with gold? I mean, with Bitcoin? Upward rush, flattening out, and slight drop. Okay, this is what we mean where cryptocurrencies and Bitcoin in general, or specifically, I should say, have been mirroring gold movements quite a bit. And we're not talking 100% the same, but look at the direction. Look what's happened over the past several days to week. Okay, so very similar. And it's very interesting to start comparing. If one moves before the other, does that give you a clue as to which way the other will go? And then if everything else lines up for your checklist of rules for trading on it, maybe that gives you one more reason to believe Bitcoin or whatever it might be will go a certain direction, because maybe something else is acting as a leading indicator to the other. Okay, it's called cross pair trading. To look at a relationship between two different assets and say, okay, one doesn't always move before the other, but whichever one moves first, the other tends to follow. So, gold's pulled down more than the cryptocurrencies. So maybe this is poised to pull back down a little bit further. Hard to say for sure, but the relationship is at least there. Listen, there are some predictions about that, that the cryptos could really take off. Thomas made a comment here that he thinks it's time for the cryptos to take off through the roof. Listen, they had a lot of bullish momentum this week. That's for sure. No guarantee how high they're going to keep going in the short term. You always have to be prepared for a pullback. And what's nice about not owning the coins but trading them on them CFD style like we do here is you can make money when they pull back too. You can get just as good at trading down as up. So keep that in mind as well. But certainly there's a lot of bullish momentum. I think this is a good place to stop today. Any last questions or comments before we end things? All right. Thank you, everybody. I appreciate the nice comments and the participation as well. It's nice to have good questions and input, insight from your side as well. Things that maybe I'm not thinking of, and you make good points to share with everybody. Makes for a good session. So we'll have another session tomorrow. It'll be not crypto based, but we'll be covering a number of assets, looking at the fundamentals and technicals. It'll be a bit earlier in the day, 10:30 a.m. GMT time is the start time. You're welcome to attend. Until then, good luck with your trading today. I think you'll see some nice movements here, some breakthroughs potentially that are nice here with the cryptos. And keep your eye on the indices, gold and oil. I really, those are the go-to assets right now, I think. Hanny, the next webinar you attend, speak up near the beginning and ask me, hey, go over hedging. And we'll do it with live examples. We'll go over how to hedge in the next webinar that you attend. Okay, just speak up and ask for it, and we'll do it. Okay, great. All right, thank you, everybody. Bye for now. Otai, the gap usually occurs Friday to Sunday because a lot of news comes in through the weekend to change the market. And so by the time Sunday night / Monday comes and the market's open, you get a gap. Now with cryptocurrencies, they run through the weekend. So you don't have that weekend effect. So then it has to be some major news that came out during the market hours to get a gap with the cryptos. Okay, good question. All right, bye for now. Take care.